Hey guys, Bill Soriano from Pittsburgh here, 8 a.m. on Sunday, April 5th, 2020. Hope everyone is doing good, virus free. Hopefully, stay inside if you can. If you got to go to work, make sure you're protecting yourself. Really scary times going on here. But wanted to make a quick video today for you. And what we're going to do is we're going to go over the money management rules, and this is probably going to be the most important video that I make for the group here, and we're not even going to open a chart on this video. So money management is probably the most important thing, because once you run out of money, then you're done trading. And we're trading so that we can make money, not lose money. So just to show you the post that I made in the group yesterday. This is the Forex Trading Authority. If you're not a member right now, there'll be a link below this video to go ahead and join the group here. And so right here I posted yesterday that moving forward we're going to be testing 3 strategies in this group. 2 of the strategies are pure price action strategies. Those are the kind of strategies I like. I don't like a lot of indicators, guys. The price action strategies, the only indicators you have on there are moving averages, which are obviously derived from price action. So there's nothing to purchase to follow along with these 2 strategies. You just have to have your trading account set up and your MT4 set up, to take your trades. The 2 price action strategies, we're going to name them the 1-hour date trade and the 4-hour dare trade. Okay. So you'll get more information on that in the next video I make. The 3rd strategy is going to be the 1-hour FIBO trade, and that's using the Fibonacci style indicator that I purchased called FIBO Quantum. So you do need to purchase that indicator if you want to be able to take or if you want to be able to follow along with these trades. Obviously, you could take the trades that we talk about in the group, but if you want to be able to install it in your MT4, then you do have to purchase that indicator. And I do have a link right here in the group. Right here, this is the FIBO Quantum indicator, and purchased it. I believe it's $147. I purchased it a couple weeks ago. Very good indicator, guys. I think that the Fibonacci, sequence and everything about Fibonacci numbers is something that really interests me. So I like to incorporate that into my trading. Now, normally when you're using a Fibonacci style trading style, I should say, you're looking for a trend in the market, and then you're looking for a retracement or a pullback before you get in. With the FIBO Quantum indicator, it's more of a continuation of the trend rather than a pullback. So it doesn't search for those pullbacks. However, you do see them after you get into trades, but we'll talk about more on that when we get to the next video, where we'll actually go through some of the charts from this week and see what's going on there. So this was the post that I made in the group there, and these are the 3 trading strategies that we're going to concentrate on moving forward in the group, and we'll be testing them out on demo. Now, we do have quite a few of these 1-hour day trades. We have quite a few of these already in the group here. The charts are already here, showing the trades that were taken, and that's I think in my trading journal for that I have about 12 or 13 trades, and there were only 2 losing trades using that strategy. So let's get back to the money management, which is the topic of this video today. So the money management trading rules, these are very important. This is, like I said, the most important video that I'm going to make out of the set of videos that I cut for this group here, for these 3 trading styles that we're going to test out. So you never risk more than 3% of your capital on any one trade. That's the maximum. It could be 1 to 3% that you would risk, depending on how aggressive you are, but 3% would be the most. So to give you an example of that, if you have $1,000 in your trading account, 3% of 1,000 is $30. So that means you would never risk more than $30 on any one trade. Okay. Now, as you're trading throughout the day, you're never going to want to lose more than 10% of your capital in any one day. Okay. So again, $1,000 trading account. If for some reason you're trading and you lose $100 with a $1,000 trading account in one day, that would be it, guys. You would immediately stop trading at that point, so that you don't lose any more in one trading session. Okay. Now, also important is once you are up 20% in one session. Now, you may, just to let you guys know, you may never hit these actual numbers. These are just the maximum amount that you would allow yourself to lose in one day. And on the flip side, when you're up by 20%, so on a $1,000 account, if you would be up by $200 in a single trading day, then you would want to stop trading as well so that you don't give any of that money back. Okay, so, and like I said, most of the time you're never going to get to these limits throughout the day, but these would be the limits if you do get to them. And I don't mean if you're up $200 and you're still in a trade, that doesn't mean you exit the trade. You know, you keep the trade running using your money management rules and your trailing stop rules, which we'll talk about here in a minute. And once you exit the trade, if you are up by $200, or somewhere around that amount, you would want to stop trading at that point so that you don't give any of it back. Now, before entering a trade, and money management is just so important, guys, because if you think about it, let's say you have $1,000 account, take $1,000, you put it in your account, and let's say you're trading throughout the month or so, and for about a month, and you're just not following, you don't have very good money management rules, you're not sticking to them, you don't have an exit strategy in place once you get in the trades, or a trailing stop as I call it. And let's say that for whatever reason you lose 50% of your trading account, you lose $500, right? That's a big loss, 50% on your trading account. And I'm using 50%, a big number, so that you understand what I'm trying to say here. Now, if you're down 50% in your trading account, now you only have $500. So it's very difficult now at this point to get back to even. And the reason is because now that you only have $500, when you look at 3% of your capital now you can only risk $15 per trade instead of $30 per trade, right? So as your trading account diminishes, if unfortunately it does, if you're not following strong money management and you're just not taking the right trades and following the strategies correctly, as your capital would decrease, you would have to then decrease the amount of money that you're risking per trade. And on the flip side, as you gain more money, as you start making money, then you can actually risk more per trade, right? But to try to make up, once you're down 50%, now you need to gain 100% on that money that you have left just to get back to even. So it's very difficult. You have to preserve your capital. You just have to watch it like a hawk when you're trading. And obviously I'm talking about, this is for when we're trading on our live accounts, right? We're going to be testing the 3 strategies out, like I told you, on demo. So, we could relax a little bit, although we still want to, follow the rules so that we have a good, accurate indication of whether or not these trades are going to work out for us when we do go live. But this is obviously for your live account, guys, that you just have to watch your money. And once you get in a trade, you have to watch it. You have to keep watching to see where you're at throughout the day, so that you can profit from the trade, make the most that you can from it, and in the event that it's a losing trade, that you don't lose too much. So before entering a trade, you're obviously going to check to see what your stop loss is going to be in pips, and you need to do that so you can determine your position size, right? So if you're going to have 100 pip risk and you're risking a maximum of $30 per trade, that means you can take a 0.03 lot size. So on average, guys, here's the averages, and all the currency pairs are different. But on average, at a 0.01 lot size, each pip is about 10 cents, right? At a 0.10 lot size, each pip is $1, and then at a full lot size, each pip is $10, okay? So, and then of course you just, if you wanted to take a 0.02 lot size trade, then each pip would be 20 cents. At 0.03, each pip would be 30 cents. Here at 0.20, each pip would be $2, right? At 0.30, each pip would be $3, and like 2 full lots would be $20 a pip. So, and these are average, like I said, on average, this is what you use. Now, we do have a calculator that you'll get access to where you can actually get the exact number, that you're going to want to do. But it's very important that before you get in the trade, you're able to see what where your stop is going to be, and you'll determine that stop obviously based on the trading strategy that you're using to take the trade, right? So there's different ways to determine that. And with the good thing is with the FIBO quantum indicator, that stop is already plotted for you right on your charts. So you just have to, so it's very easy for you to do that. And you'll also get a text message or an email, or right on your screen, you'll get a message telling you to enter a trade and what your stop loss is, as well as your take profits. So after entering the trade, you want to set your stop loss, like we're saying, per strategy used. And you also want to set a profit target, a take profit target. And that will be different per each strategy as well. But that initial profit target should be at least 2 times the risk in pips. So if you're risking 100 pips, you're going to want to set your initial take profit at 200 pips. Okay. Now, you can change that, and we'll talk about that in a minute here. Well, you may not change that. You may just change your stop to make changes to it. But you may leave that profit target in there at 2 times your risk, and then if you would hit that, you would obviously get out of the trade with a profit. And the reason why we make the profit 2 times the risk is because we're not going to win every trade, guys. And sometimes, we could lose 2 out of 3 trades. Well, if we're letting our trades run and we lose 2 out of 3 trades, if we're able to make twice as much on the winning trade, then we'll still break even if we lose 2 out of 3 trades. Now, a lot of your trades, you'll be out before you would hit your initial stop loss or your take profit target, but that's the best case scenario. In the best case scenario, that's how that would work. So very important to have an exit strategy, or what we're calling a trailing stop. So once you put that take profit in at 2 times your risk, or whatever it is based on the strategy, like I said, with the FIBO quantum indicator, it's going to plot it out for you right on the chart. You'll have 3 different take profit targets on there on the chart. But with the other 2 strategies, the 1 hour date and the 4 hour dare trade, there'll be a different way for you to create to create that, where you're going to put your take profit at. But you need to have an exit strategy, and this will you'll be able to see why in the next video when we actually go through some charts and see how some of the trades panned out for us. You need to have an exit strategy to preserve your profits when you do have them. So when you're in a winning trade and it starts moving in your favor and you're up 10, 15, 25, 50, 75, 100 pips, what are you going to do now? Because sometimes in trades, guys, you could be up, 50, 60 pips, and if you don't do anything, if you don't do a trailing stop, sometimes that trade can go against you, and all of a sudden, before you know it, you check your MT4 and you're back down to break even, or maybe you're even down 10 or 15 or 20 pips, or maybe you're almost getting stopped out now with a complete loss, right? So you were at one point, you were up 50, 60 pips, and now all of a sudden you're losing money. Okay, we can't let that happen. We just can't let that happen. We have to have a strategy in place, and we have to follow that strategy to the letter all the time so that we have good results. Because if we have the strategy in place but we don't follow it exactly all the time, then it just doesn't create the profit that we need to have, because we're not making enough money on the winning trades to make up for what we're losing on the losing trades. Okay, so when you're up, this is just an example, and this is something this is probably the example that I'm going to follow here. And like I said, you'll get a better idea of it. I'll refer back to this example when we look at some of the trades in the next video, and how they went into profit, and then sometimes they pull back against us, and what would happen there. But what I would suggest is, you're up by 25 pips, then right away I would move my stop loss to break even. Okay, so now if something happens, the trade just goes against me, and for whatever reason it starts going against me, right? I can at least get out at break even, right? Instead of losing money. Now, sometimes, guys, this happens to you. You might be up by 25 pips. You move the stop to break even. It goes against you. You get stopped out. And then all of a sudden it goes back in the direction you want to go for 50 or 60 or 70 or 80 pips. That happens sometimes. But we have to have an exit strategy in place, right? Even though we know that could possibly happen, okay? Because the worst case scenario is that we're up by 25 pips, and now all of a sudden it goes against us and we get stopped out with a 50 pip loss, right? So now it's not just like we lost 50 pips. Now it seems like we lost 75 pips, right? Because we were up by 25 pips at one point, okay? So very important to have this exit strategy, which is going to be a trailing stop, actually. So up 25 pips, move your stop loss to break even. Up 35 pips, move it to +5, right? If you're up 35 pips, there's no reason why you should now lose money on a trade. You should make some money, even if it's just 5 pips, right? Up 50 pips, move your stop loss to +10, right? Up 75 pips, move your stop loss to +25. So this still allows room for the normal, for the normal movement of the currency up and down without you getting stopped out, but it protects you in the case of a big move against you once you're already in profit, okay? But like I said, guys, nothing's perfect. There will be times where you'll get stopped out with that break even or small gain, and then it'll just go back in the direction we wanted it to go, right? But there will also be times where you will get stopped out with that small gain or break even, and it'll go and actually against you and hit your stop loss where you might have lost 50, 60, 100 pips on the trade, right? So very important to have this trailing stop. So that's really what I wanted to go over in this video. And then there's going to be, obviously, in the next video, we're going to look at some charts and we're going to see some trades. But what I wanted to mention here, these money management trading rules are very important. And this document will be put in the group, obviously. And, we'll add to it as we go. But these are the initial money management trading rules. Now, for each trading strategy that we use, each of the 3 trading strategies, there will be some rules for entry on those strategies. Okay, so there will be, what needs to exist in the market for you to take a long position, what needs to happen for you to take a short position, and there'll also be some different rules there for each strategy around how to enter the trade, how to set your stop loss, and how to set your initial profit target. But these are money management trading rules that need to be followed no matter what. And then just getting back into the group before we finish up this video, I just want to say that when you look at these 3 types of trades that we're going to be taking, like I said, the 1 hour date, the 4 hour dare, these 2 trades, you don't need to purchase anything. They're just using price action, and all we have on the charts are the moving averages that we need for these trades. And then the third strategy is the FIBO quantum, or the FIBO trade, as I'm calling it, using the Fibonacci indicator, and that does need to be purchased if you want to be able to put that onto your charts and use it. Now, the only thing I'm going to say about this is that we're going to have the opportunity for more trades with the FIBO quantum indicator. So the 1 hour date trade does produce, pretty good trades, but sometimes you can go for a whole week without finding a trade using that strategy. And the 4 hour dare trade will probably be even less trades than you will find with the 1 hour date trade. So most of the trades that we find will be using the 1 hour FIBO trade strategy using the FIBO quantum indicator. So just keep that in mind. There will be trades without that indicator using the 1 hour date and the 4 hour dare, but most of the trades that we take will be found using that indicator. And that's one of the reasons why I wanted to use it, because we're just not going to find as many trades as we need to find with these two strategies right here. All right, so if you haven't joined the group, click on the link below this video and click the join button. I'll add you right away. As soon as you get in the group here, you can go through, you can see the charts on some of the 1 hour date trades that I've already taken. Tells you why we took them. There's also one here for the FIBO quantum indicator that we took. And, we'll be posting these. I like to post the chart where I entered the trade. Sometimes I put on the chart why I took the trade. And sometimes I'll put the trade confirmation that you get from MT4 so that you can see it as well. Try to be as transparent as possible so you know what I'm saying, we're actually doing here in the group. So, Bill Soriano from Pittsburgh, and this video was on the money management rules that you need to follow when trading with your live trading account. So, let's make it a great day, guys, and let's make it a great day trading Forex. The markets will open today, 5 p.m. Eastern Time, and we'll get to it. Have a great day.